So, from a financial services standpoint, I think one of the major expectations that we actually have is to look at some of the directions from a private capital standpoint in terms of enabling consolidation within the banking segment, in terms of reforms around how exactly can urban cooperative banks come together, what can be some of the acquisition M&A easing from urban cooperative banks being taken over by small finance banks or getting converted into small finance banks could be some of the useful reforms, at least from a banking standpoint. From an NBFC perspective, we actually are hoping that we can see some announcement on a a special liquidity window for NBFCs, because liquidity risk is one of the biggest challenges that the NBFCs face, and any amount of unchecked liquidity risk can, significantly escalate to a solvency risk for NBFCs. And we are hoping that we actually see some bit of reforms from that standpoint. We are also expecting from a innovation perspective focus on budget outlays from an artificial intelligence as well as from a quantum computing standpoint, because I do believe that investments and budget outlays in these directions, more in terms of creating public goods, will help the entire financial services ecosystem. Another reform that we're actually hoping to see is the whole public cloud infrastructure that RBI kind of mentioned in one of the monetary policy announcements some time back. Some bit of progress on that direction. So these are some key reforms that we're actually expecting. Uh, One thing additionally that we also are hoping, not sure whether it will come in this year's budget or next year, is rationalization of tax rates for foreign banks to provide a more level playing field for them. But yeah, these are some reforms that we're actually looking from a financial services perspective. So in fact, primarily from that standpoint, there is a two-pronged reforms we expect. One is, obviously, I mentioned that from a budget outlay standpoint, you need to have an allocation towards the leveraging the technologies, especially from an AI and a quantum computing standpoint. But part two is also with respect to significant financial literacy investor awareness sessions that actually need to be conducted with respect to the potential attack surface, cyber threat surface that's actually changing from a customer standpoint. And we expect actually the regulators to play a significant role in this direction. So we expect that the announcement on the AI quantum computing will not be standalone, but it will actually be in conjunction with the push that the regulators will be driving from a whole the investor awareness, financial literacy, specifically with a focus on how the changing tech landscape can actually change the attack surface and impact customers. So awareness, we believe that there will also be a push from that standpoint, because consumer interest, consumer protection is a significant focus area. We expect that to not change. It has been a focus on almost every budget discussion. We expect that to continue this time as well. I think, see, unsecured credit, unfortunately, it's got a bad name, but it's actually something that is very important from an entire ecosystem standpoint. What's needed from an unsecured lending standpoint is a more balanced asset quality approach. And unsecured lending has inherent risks that always existed. It's not new, unfortunately. When there is a turn of cycle, when there are external events, the portfolio kind of, turns in a different direction. But from a reform perspective, what we genuinely expect are two pieces, honestly. One is that a focus on credit refinancing, specifically for the sensitive sectors that are actually exposed to global uncertainty. So, for example, the entire MSME ecosystem that depends on unsecured credit, where they have exposure to global markets from an export, they're export intensive sectors which are focused on that. The global uncertainty impacts them. So I believe that having credit refinance facilities specifically with respect to the MSMEs that have an exposure to global markets, I think that's a reform that we actually expect. And secondly, for those MSMEs who already have a current exposure to the export markets and have been subjected to the amount of challenges that were, thrust upon them due to the uncertain environment, regulatory forbearance with respect to those sectors and, MSME sector with an exposure to exports would be useful. So these two announcements, we believe, would help the sector a lot. Uh, primarily from a unsecured lending standpoint. And one thing that one needs to definitely understand is that RBI does not frown upon unsecured lending. RBI only frowns upon poor underwriting practices with respect to this space. So I think that differentiation the government respects. And in line with that, the initiatives around credit refinance and regulatory forbearances are the reforms that we are actually expecting to see. See, I don't think I don't foresee that in terms of from a focus on standard deduction. I think that I mean, at least from a budget standpoint, given that there is there is a whole political continuity advantage that we actually have from an India standpoint, and reforms are seen as a continuum. What I think is the focus will be largely on increasing the growth in the country, creating employment opportunities, and providing more opportunities for growth to individuals. So I think the focus is on enhancing the earning potential of people through structural measures rather than focusing on tax deduction is at least the sense I have, because there is a expected interest rate reduction that is supposed to happen. So I believe that from that standpoint itself, the mortgage, from a home loan standpoint, that will become cheaper for people. So I believe that on account of these factors, standard deduction, relooking at those deductions from a fiscal incentive standpoint may not be a focus for this year at least. I mean, going forward in the future, yes, maybe, but at least from this year's standpoint, I don't see that as a possibility. I believe that what the government is trying to do is not the government is trying to create more efficiency in the tax structure to increase growth, and as well as a result of that, increase revenues. Uh, altering altering tax structures from an individual standpoint, I don't see as a priority, at least for this year, given that there is already a lot of changes that are happening. So, global growth has been a challenge on account of very challenging geopolitical environment that we are in today. 2025 was at least a year there the world was kind of coming to terms and understanding, and contrary to what people said about decoupling from, there would be a decoupling from China or a decoupling from Russia, or there will be a change in world order, or those aspects. What I believe is that the world is now adapting to a new environment where US is not the central focus. And I believe 2025 has been a period where the entire world has experimented with that and gone in a certain direction. So 2026 would be a year where we believe there is a lot of stability that will come, because because this uncertainty has now, people have learned to kind of adapt with it. Now, with this background, India knows that the growth essentially is going to come from investment in India, from growth that basically in terms of is generated from the country. So from that perspective, easing private capital requirements from an investment in an India standpoint will play a significant role. Initiatives around ease of doing business, single window clearance for a lot of business approvals, as well as harmonization of regulatory requirements across regulators and across multiple guidelines, and simplifying that will play a lot of role in kind of rationalizing the cost of doing business as well. So ease of doing business, cost of doing business, simplification of capital from an investment standpoint in India, reforms that will actually help drive growth uh, in India, given the whole context and learnings that we have actually had from 2025 in terms of how to adapt to a new world.